We're live. Good morning and welcome to the Market Prep. It is Tuesday, June the 6th. My name is John Hoagland. As always, thanks for trusting me with your time. We are going to focus on seeking accurate context, always thinking about good risk management, and remaining patient in our trading. Welcome to my futures family. What are we looking at today? We're not looking at much. There's virtually no economic data coming out today that I can see on any of the calendars. At 10 o'clock, however, we do have some short time frame bill announcements, really not impactful. So we're going to see what traders and investors think of these markets just as they are with no new information. Of course, we all know that new information can be introduced to the marketplace at just about any time. Anytime somebody has something to say. So just kind of going into the market, knowing there's no known new data coming out, trade what you see today. Trade what you see. There's going to be, I think, some thinner nuances, some thinner information coming at us from these markets. Don't forget our equities and currencies are in rollover. And so I'm just going to be patient and see if I can't find the right opportunity for me to get into the marketplace. We've got the equities kind of ready to open steady to lower. We've got gold a little bit higher. Looks like the euro is approaching an important inflection level. We're going to see that in the charts here very shortly. But as far as any other news that has come out last night and through the morning this morning, apparently the SEC is suing Binance, the largest crypto exchange platform. They're claiming that the exchange has diverted customer funds to a trading entity controlled by the exchange's CEO, also stating that Binance has been operating unregistered exchanges. So a little bit of trouble there. We've got the Reserve Bank of Australia has raised rates again to 11-year high. Now, there's a bit of a surprise after an expected pause in rates. Crude oil prices continue lower after OPEC Plus announces production cuts, and that's being blamed on possible economic outlook issues in the U.S. And the U.S. equity futures again set to open sharply, steady to lower, with very little outside influence as far as economic numbers are concerned. This morning, the VIX is a little bit higher than the close. It's 1481. It was 1517 yesterday. The dollar index also pretty much where it was yesterday. I mean, the dollar index 104.30, it looks like 104.31 yesterday at this time. Then the yield on the 10-year largely unchanged. It's 3.71% at 3.74% yesterday. So not a lot of change in the landscape. We're going to see how these are again, investors and traders are going to be treating the lack of information today. What are we looking at? I mean, we do have international trade and petroleum status report tomorrow. Thursday, the big number is probably going to be the jobless claims. And of course, investors and traders will be hawking that information because that's all we've got to lean on. We have the FOMC meeting a week from tomorrow, 8 days from today. The talking feds are on lockdown, not allowed to speak for the 2 weeks before the FOMC meeting. So we are kind of on our own. We are adrift in the seas of the markets, if you will. I don't know how prophetic that really was, but kind of fun to say. As good morning, everyone. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Subscribe to our YouTube channel so you can get notified when we do go live. And good morning to Jimmy Decker. You're the first in the room. You win the prize this morning. Good morning and happy trades for all. Rooster crowing early this morning. Good to see you. Haggle Matters, Rob T, Brian, Pete, Shaw. Good morning. Lacey says good morning to everybody as well. George, and Shaw always saying good morning to Lacey. Scott saw and he conquered. Jason, good to see you this morning. John Alejandro, I got lost. Barry Brooks, Kegs. I'm a frog. See, Kegs. Trader, Fabe, good morning. Khalid, Vince, good morning. Good to see you. Travis, my brother Thomas, good to see you, buddy. Jeff, George, Duque, good morning. Theo, Naztic, Anissa, Stephen, Bill, James, good morning. Sean King, I think we were talking about you yesterday, Sean. Weren't you the one that was talking about your book map? And maybe we'll get you in Make Hogue Money one of these days to kind of talk about how you look at Bookmap. I'm pretty sure that's the same, Sean. Will, good morning. JD, Jimmy Decker. John Doherty is with us this morning. Good morning, JD. Always good to see you, my friend Don. John, Rusty Golfer, my spirit animal, is with us. And Dan Trader. Good morning, everyone. Let's, without further ado, jump into the charts. We do have Make Hogue Money right after the prep this morning. We'll be doing it old school, so we'll still be doing it that way. But don't forget, we are going to be going to a more continuous broadcast, and we probably won't be doing Make Hogue Money on Zoom relatively soon. Don't have a perfect date on that, but that's the way the cookie crumbles. So here is the daily in the S&P. It's in rollover. We know that. We've still got substantially more volume in the June contract than the September contract. I'll be watching and letting you know when I'm going to switch over. I'm sorry, I'm moving in and away from the microphone. Sorry about that, John. I didn't know that I was doing that, but I'll try and be a little bit more stable here in front of this mic. It's a very sensitive mic here. So, all right. In rollover, sellers, it seems, have placed some cautious bets off the high yesterday, but there is a caveat to that. We added 12,000 in open interest yesterday off this high on lower volume. So the pullback kind of cutting off volume a little bit. And I question the direction of the increase in open interest. Our upside structure remains intact. So here's the trade yesterday. Now, for 2 days now, 2 straight days, we've had some pretty deep negative delta. Look at where the value ended up yesterday. It ended up overlapping to higher, even with the pullback at the end of the day. So with the delta exceedingly negative, I think it was around minus 19,000 at the end of the day yesterday, with an increase in open interest and value moving higher, it gets a little bit blurry as to what direction the new open interest came in. I'm kind of looking at it as continuing new longs coming in, that's as we've seen for the last few sessions. So where are we as far as the open today? Well, we don't have any overnight inventory. We've got, again, 2 days of deep negative delta, but value continues to move higher, indicating potentially longer time frame buyers increasing open interest yesterday, more than the probability of shorter time frame sellers. Well, what's that mean for us today? With no new information, I'm going to try and stay patient and trade what I see. Again, no overnight inventory with which to help with that situation. It looks like we're going to be opening in range, but below value. Might be an interesting opportunity earlier in the session. However, we still have some unfinished repair down below to this point of control down here. Have we seen any real participation down below this afternoon pullback low from Friday? I mean, we really rejected it at the end of the day yesterday, but most of our overnight activity, as a matter of fact, all of it has been down below that level. So if you're looking for substantial participation below that level, we may have seen it overnight. Again, it doesn't really bode that well for me because there's no big participants. There's no major participants overnight. So I find myself seeking and really trying to find a ruling reason or a prominent nuance in the market this morning, and I'm having a difficult time finding it. So if that's the case, I'm going to try and stay patient. We do have a double bottom here yesterday. That's a kind of a weak low. We didn't really extend below it. And what are we looking at as far as the TPO chart here? Well, we have a normal variation day, somewhat extreme because value, the points of control are above the week low. The overnight, another very small overnight range that's inside the regular trading hour range from yesterday. What is the nuance? What are the valid hypotheses for this? Well, we could see a completion of repair down to here. I find myself reaching to find the most important nuance. If you were to ask me, I would say the most important nuance is the fact that we did put in a recent overnight high yesterday in the regular trading hours, and we have a weak low. I would be kind of looking for the market to test below this weak low, seeking buyers below that level. This does look like a kind of an unfinished downside auction. Yesterday, the shorts got too short and we couldn't continue. Could be a different situation for today. So again, I find myself reaching, searching, trying to figure out the nuances that are available and which is most important in the current situation. And it's a stretch for me today. So try and stay patient. We are going to be doing make hold money today. We're going to see if we have um, um, we're going to see if we have opportunities in make hold money today. We didn't really see much yesterday. We didn't have a lot of movement or opportunity yesterday in make hold money. We're going to see if we can't find that today. All right. What about the crude oil, which is just about to open up? So production cuts bring price back into balance instead of driving it away from balance. The OPEC production cuts over the weekend overshadowed or overweighed by, I guess, potential economic worries here in the U.S. Well, the debt ceiling is over. I'm looking forward not to having to say those words for a little while. But again, we've got rejection above value, above price, above balance. We're right back in the middle of balance. We talk about how, the extremes, weekly kickoff high, last week's high, weekly kickoff low, last week's low. Those are the extremes that I'm really looking for bigger opportunities. It doesn't mean that there's not smaller opportunities, but again, I think they're going to be somewhat difficult because nuance is a challenge, it seems, at least in our equities. What else do I have here? We added 11,000 in open interest off that high yesterday. So we had some pretty good naysayers coming in, adding to short positions. Here's the 30-minute chart. Let me know if there's an issue with the sound today. We are using a different production software, and if it's not working well, we'll get that figured out. But anyways, here's the 30-minute chart. Now, at the very least, we have the opportunity to take advantage of some overnight inventory, which looks pretty excessive to the short side. It's already reconciled some of it. It looks like we're going to take out this naked point of control here. However, there is extra space to the downside if we do kind of open and hold below this point of control right here. This point of control, high volume node opening between the high volume node here and the high volume node here, which is basically right down to weekly kickoff low, offers the opportunity to repair this information that remains unrechecked and unrepaired from last week. This was Thursday of last week. And see what happens. If we can't accept below this point of control after the open, I would look for a move back towards the range from yesterday and an overnight inventory adjustment. Not something I would fall in love with. If I do get a decent trade in the opposite move from the overnight session, I'm going to take it and then be patient and look for the next opportunity. Again, nuance, gap rules, overnight inventory short. Those are the nuances that I'm kind of focusing on early in this session here this morning in crude oil. What about the TPO chart? Excess high. Hello. Where did we go here? So we have an excess high. The IB is the high of the session. Normal variation, kind of extreme trading day. Most of the activity was below the half back mark here yesterday. We could say that the afternoon pullback high was here, which isn't very strong. This is not a very strong intraday high here, and we do have excess on the low, but that excess on the low is holding as the high of the overnight. So now we're just opening up. We've opened below this point of control. The probabilities have increased of a move back down to this level, which takes us to weekly kickoff low and repairs all this information here. If we can't continue in that direction, if the short overnight inventory, those that are holding those shorts, don't continue to get paid, they may get nervous and bring us in the opposite direction. So there's two real hypotheses there. Continuation to repair the profile from Thursday, and if that fails, an inventory adjustment back to the range from yesterday, back to close the gap. Nasdaq might clip too hot. Okay, let me take that back a little bit here. Check. Let me know if you can still hear and if that sounds better. Maybe I'm just a little bit loud today. I don't know. It has been known to happen. Let me know if that feels better, Barry. All right. Sounds better. Stephen, sounds good. Okay. Excellent. All right. Thank you, Peter. Yeah, maybe it was just a little hot, huh? All right. Nasdaq, here we are. The other equity index that we focus on here. All right. So yesterday, what did we do? We added 7,300 estimated open interest. We have been talking about the idea that the upside auction in the Nasdaq has been tiring. It's getting closer to exhaustion. It's going to take a lot of new business and energy to continue this move to the upside. So yesterday, we ended up basically putting in a doji. It's just an indecisive day in the Nasdaq. So we've been talking about the tiring upside auction. The market may fall into range or some sort of a deeper pullback if that is the case. Don't forget it's in rollover, so the volume and open interest becomes a little bit blurry and harder to read. We're at the beginning of rollover, so I don't think it's that difficult here just yet. But, and that's a big but, volume and open interest were okay. Volume was all right yesterday. Open interest, we did add 3,700 in open interest. And I don't think that open interest was necessarily related to the rollover here just yet. So again, we don't see a lot of delta divergence in the Nasdaq, although at the end of the day yesterday, we had some pretty decent negative delta that kind of occurred on the way down. Where did the open interest come in is the question. Value moved overlapping to higher. The range was overlapping to higher. I'm going with the open interest increase was to the long side. So we still continue to see buyers coming into this market, even as this market is giving signals or nuances or possibilities or tea leaves. I don't want to say the other one. Rooster might get mad at me. Are saying that the auction is tiring to the upside. So we still may be trapping some longs up there, and those trapped longs may not care that they're trapped, right? If they're hedged in other things, like most of the majors, other time frame players are, this is just an adjustment in inventory to protect and to work different products against each other. So here's the 30. That is not what I'm looking for. This is the one I'm looking for. Oh, here is it. We were on the 30. What am I talking about? I think I'm going crazy. All right. So now let's look at the TPO chart is what I think I meant. So yesterday, the IB is neither the high nor the low. We have a low excess high. I think we did finally put the overnight, the regular trading hour session at the high instead of the overnight high. It's really close. So a low excess high and a relatively weak low. Normal variation day, neutral, with no extremes really on either side. Further kind of complicating things. Look at how far we've got to go before we get to any kind of repair from last Thursday. We were looking at this in the S&Ps, right? Well, the S&P is traded down to here yesterday. The Nasdaq is still presenting as the higher, the stronger of the two amigos that we look at. So inside range, inside value, no real overnight inventory, right? Here's that 30-minute chart. No overnight inventory. Try and stay patient. Again, with no data, no economic information, no talking feds, no runs, no hits, no errors. Trade what you see. And if you're not seeing a clear ruling reason or clear nuance that is presenting itself as the most important in the current situation, then I'm going to be patient. If we were in this situation and we had some overnight inventory to the short side, that might be considered the most important nuance and the ruling reason for early trade today. But we don't have that. We're in range, relatively close to value, and there's very little nuance with which to lean on. So again, I'm going to suggest, you know me, and you hear me say it all the time, let's stay patient, everybody. I don't really want to go looking for trades today. I want to be patient and wait for a trade that comes to me, even if it's just a cheap trade on the extreme, and we'll see what happens. Right? And speaking of extremes, gold is right in the middle of the current area of balance. We're not near extremes in the medium or short time frame daily chart here. We're right in the middle. So anything can happen. No news, no nothing going on. What did we do? We lost 1,200 in open interest. That continues as a trend in open interest falling. It's been since what did I say, the 16th? We've lost 20% of the open interest in this gold contract. 20%. It's over $100,000 we've lost, or excuse me, 100,000 in open interest we've lost since that day. The money is just pouring out of gold. Why would we be pouring money in? Although the market always looks best at the top and worst at the bottom. Well, overnight inventory, we don't really have any. Let me get my notes here again. Gap rules. Did we open with a gap? No. Maybe. No. We're kind of bordering the upper extreme of the range from yesterday's regular trading hour session. Possible repair above, but we're going to have to reject value from yesterday. If we did open outside of range and value, the value area special situation play could come into play. There's room for repair down below. There is room for repair above. I wish I had a coin. I'd flip it. I don't know what to do. So I don't do anything. If you don't have a ruling reason or a nuance that is presenting itself as most important in the current context, stay patient. Here's the TPO chart. So yesterday, we did have a pretty decent upside move after the 730 numbers. We left excess at the low. We left excess at the high. It's all in whether we're going to go repair above or repair below. No overnight inventory, remember. Here's the euro, which has given us a relatively close proximity opportunity this morning here near weekly kickoff low. The low of the area of balance between last week's low and weekly kickoff low. Volume is dropping, but again, it is in rollover. We lost 500 in open interest. Again, we are in rollover. Focus is going to be on the extremes, and it's given us an opportunity relatively close to the zone down here for an opportunity on the daily chart. Here's what it looks like on the 30-minute chart. We've got overnight inventory that's pretty short here. If they're not going to continue to get paid, if they're not going to test 2 weekly kickoff low or the last week's low, if this doesn't happen, it's already starting to happen. We're starting to see some of our overnight shorts get out. So if you can find an opportunity to limit risk for longs down here, you may be able to catch the inventory adjustment, which could bring price back into value from yesterday. We'll have to see what happens. We'll do a reflection at the end of the day today, and we'll review what happened. Maybe one of those opportunities. And without another ruling reason or nuance that is presenting as more important than that, that would be my focus this morning, is to see if I can't catch a cheap long and catch the move back towards settlement, which is where the overnight started. What about the 10-year? Centrally located inside balance. Open interest continues to drop, losing 20,000 in open interest yesterday. You think a lot of Treasury traders and investors are already positioning and hedging for the FOMC meeting in 8 days. It's quite possible. The volume hasn't been that great. We've been losing open interest. What about the 30-minute chart? Is there an opportunity here? Not really. I mean, we opened inside range and value. We're basically trading to low of value from high of the range to the low of value. Possible repair down here in this single TPO situation, because it was a double distribution trend day. We opened. IB is neither the high nor the low. As a matter of fact, 3 out of the 7 markets yesterday left one extreme of the regular trading hour session at an extreme of the initial balance. That's kind of low. Well, we opened in range, we opened in value. We accept below here. We may kind of repair some opportunities down here. If we don't, we could just range here all day. It seems as though traders have already resigned themselves to just get flat or get hedged for next Wednesday. Here's the natural gas here. Volume and open interest was higher on a pullback off that low. We added 5,100 in open interest. Some buyers came in, some downside doubters. It's up to us to figure out if this is going to end up being a bear flag. Here's the 30-minute chart. So narrow ranges, lower volume. These 2 days, not so, much more volume on the down days than the up days. We may already have broken out below this lower channel line of a bear flag. This market could come all the way back and test that level. I'm going to put just a a random, just a quick line on here, because it looks like we've got one, two, three relatively close point of contact. This market could come all the way back up to here and then find a different direction from that point. Here's the TPO chart. We'll see if there's any good information there. Poor low. Low excess high, but a poor low. This is the weakest of lows. It makes sense that the market has been trying to test lower below that level. It's an unfinished downside auction. Unfinished upside auction, we looked higher. Unfinished downside auction, we continue to look lower. So it's going to be an interesting and challenging trading day, everyone. Some days you have the opportunity to see much clearer nuances and put together probably much better hypotheses for trades. With no data coming out, no economic numbers, we're just left in our heads here trying to figure out where these markets are going to go. And these are days that typically, if I'm too aggressive, I'm going to get chopped up. I'm going to just be patient. I'm just going to relegate myself today to, it may be a tough day to try and make money. It's never easy, but until something comes to me, until there's some sort of nuance or ruling reason, I'm basically been only trading the S&Ps lately. And if there's no ruling reason or nuance that appears to itself, then I'm going to have to chill and wait. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading. Centered in your trading. You start getting emotional or angry, sometimes it's just better to walk away. Sometimes the best decision a trader can make is no trade. Be kind to yourself, be kind to others. Say a prayer for peace, and I'll see you in just a few minutes for Make Hope Money. We'll see you then. If I don't, have a great trading day, and we do have the coach's playbook today at 11:30, and then we'll do a reflection at the end of the day today. We'll see you then.